Hi, Todd VanDenburg here with VanDenburg Capital Management and another uncommon sense update. So by the time you're seeing this video, you probably have seen the Dow was down 800 at the close. It was just a bad day for the Dow. I'm not so concerned about the point drop. It was roughly a 3% loss to the market today, and by any measurable standard that can be unnerving. The reason for the drop was that the yield curve, which means the rates on a longer term treasury like the 10-year, fell below the rates for a shorter term treasury like the 2-year. And when that happens, that's called a yield curve inversion. And as the media has pointed out all day long today, when the yield curve inverts, that's a sign of a recession. Now, what's frustrating to me about this is that it's a sign, but it's not a guarantee. So the way the media talks about it is that a recession's coming because the yield curve inverted. And what they don't talk about is there's plenty of times when the yield curve inverted and a recession was nowhere in sight. I'll give you one example. In 1982, the yield curve inverted. And it wasn't until 1989 that we saw our next recession. Now, I don't know about you, but I wouldn't say that those two things were correlated in any possible way. So does that mean that the yield curve inversion that we saw today, is that actually a sign of a recession or is it not? And what we rely on here is data. So I just defy people to come up with 2 or 3 things about the US economy that would lead one to believe right now that we're headed towards a recession. I just don't know what those economic indicators are, and I follow dozens of them because the economy in general is strong. The reason that I think the yield curve inverted is sort of threefold. The first thing is the Federal Reserve, for reasons beyond my understanding, actually lowered interest rates. And with interest rates as low as they are right now, the rate you can get on a 2-year versus a 10-year had no choice but to compress. Just the act of lowering interest rates compressed the yield curve. Immediately followed after that was President Trump tweeting that we were going to put 10% tariffs on $300 million of Chinese goods. And then the Chinese said, we're not going to buy US agriculture products. Now that caused a lot of fear, so people bought some treasuries. But followed right after that, the news came out from another tweet that we're going to delay those tariffs on China, and now China's going to actually buy our agriculture. And as a result, people started selling their treasuries because they weren't quite as fearful. Now, when a lot of people sell treasuries, the price falls and the yield rises. Now, as that yield rises, especially on the 2-year, because the yield difference between the 10 and the 2 had already been compressed because of the interest rate reduction, it pretty much set us up for a yield curve inversion. So this has been weeks in the making. It's not one thing that caused a yield curve inversion, and not one of the things that I believe contributed to the yield curve inversion has anything to do with actual economic indicators on the ground. So if you're looking at my face right now, you shouldn't see concern, because I'm not concerned about our economic future, about the US economy, employment, earnings, sales, revenue, none of that stuff. I'm not concerned about any of that. What you're seeing on my face right now is a little frustration and just annoyance that things are so volatile, due in no small part to the fact that as soon as we had a yield curve inversion, the computer programs took over and made the matter even worse. So I guess what I'm telling everybody today is be patient. Don't lose your discipline. Don't stop relying on data. Don't let emotions take over. If you're an investor, stay appropriately diversified. Keep your cash reserves liquid. Don't get greedy. And if you're currently working and contributing to a retirement plan, you just got a gift because now you get to buy into the market at a level, below where it was just a couple of days ago. If anybody has any questions about this or anything about their portfolio or the economy, please do not hesitate to reach out. That's what we're here for. This kind of stuff can really be, frustrating and unnerving and unsettling. And we don't want people making, bad financial choices because they're not getting good sound advice. So feel free to call us. We're happy to help. But that was your update. If you enjoyed it, give us a like, give us a share. We certainly appreciate it. And I'll be back next week with another Uncommon Sense update. Thank you for watching. If you'd like to be the first to hear of more Uncommon Sense updates like these, please click the subscribe button below. We'd really appreciate it. Thanks again.